day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Thursday, the 21st of March, 2019, just after 3:20 p.m. Central Standard Time. You're going to have a settlement just about where you're at. You remember yesterday I told you what was going to happen, and I was right. If you look at where the markets opened, 1312.70. You had closed around 1301, and that's because the market looks at that 12:30 p.m. Central Daylight Time as a settlement price. That's how the exchanges work it, and even though they trade the 4 p.m. Central Daylight Time, it throws things off on a day, and it throws the chart action off no matter what you do. But the big event of the day was yin yang. Now let me explain that. At 1 o'clock, we get the FOMC announcement, and it was an important announcement. The dot plot went to 0, the Fed talking about when they're going to stop winding down the balance sheet and how big it's going to be. Big. So the market in the U.S. acts one way. But at that time, Asia's really not open. People sleep. You do understand that. And in Europe, all the exchanges are already closed because when we get that report, it's at least, what, 8 o'clock, 6 hours, maybe 7 hours different, depending where we're talking. So when you look at all that, the market goes into the yin-yang. We get one way. They start redoing their trade. It goes to Europe. I'm talking Asia. Then Europe comes back to America. And sometimes you're wondering, what were you trading yesterday? Well, that's exactly what happened in the dollar index. The dollar index roared this morning up almost everything that it had taken yesterday from the market. And back you gave in euro a lot from there. You were up to 15.21. You fell a full cent almost from the high, and then the market got its foot under it. In the British pound, Miss May's got her hands full. The European Union's done as we pretty much think. They're just not going to give her what she wants. There's elections coming up. They can either accept what they want and hold elections for a further extension. They don't want to be part of the election. They got a problem because I think it's May 22nd. They got to figure out what to do. So gold, that's not lost on. It's looking at it, trying to figure out what Brexit does and doesn't do. The dollar rally today it pulled the air out of the gold market when we opened up, and I'm talking the U.S. morning session. We trade all night, but when traders got in, it pulled the air out of it. And as you can see, you're about $5 higher for the week. When we take a look at this chart, it's pretty crazy. I'm going to come to yesterday. This is an outside day down. And if you'll recall, I was given my spiel, if you will, that the last trades of the day were near the day's high, but because of that settlement, you're going to be there. If you go up and take out the high of an outside day down, the market has an objective then, the way that I teach charting, doesn't mean this is correct, of going to the closest moving average, or a number above it could be a Bollinger Band. The swing line has been a pattern of higher lows, higher highs. That's still bullish. So where's the moving average? Well, I take a look right here, 1301.40, and I'm looking up here to see where the Bollinger Band is. We did not yet hit that number. So what I'm thinking, just my train of thought, you're still very much in an uptrend. You've got bias up. You've got at least potential, that line in the sand support, 1301.40. As long as the market doesn't get under 1292.50, it has what I call an open target now to the upper Bollinger Band because it took out the high of an outside day down. Don't know how to explain that any different. Momentum-wise, market's coming and trying to keep upside momentum. So bullish on all spots. Number 1, bias up. Number 2, higher lows, higher highs. And number 3, momentum pointing to the upside. When we come over to the ETF, it's different. Remember, the ETF's trades, and settles when the market finishes trading, which to me makes all the sense in the world. And what you have is a lower low, higher high in an overbought condition, and the market is stalling out a bit because of that. Now, when we look at GDX, you had yesterday an outside day up. You added to the gain on that today. You are in overbought territory. You still have the pattern of a lower low, higher high. If the market can build on this, maybe it gets to 23, the upper Bollinger Band. If it fails here, look for the market to try to find its path, or support might be the right word, at 22 1/4. The gold-silver ratio is rolling back. Now, the last time it came down to the 18-day moving average of closes, it found its footing and rallied again. My argument has been to get a bull market in the metals often. The base metal, silver, comes alive with it. Silver is not a precious metal. As much as ads on TV want to tell you it's going to $50 and everything, if that's the case, why aren't you buying palladium? I mean, it's a runaway market to the upside. It's been the strongest. But it has a purpose to the gold-silver ratio that people do watch. And as it comes down like that, that means silver is gaining a bit on gold. And as you can see, silver held up today. Higher low, still lower low, higher high, support back here. Momentum pointing up. Copper market, you talk about a gift. You've been going sideways. Remember what I told you. A lot of people are apparently doing something in options because CME Group 2 days ago said they hit a record amount of open interest in copper. Well, I look at sideways action and say if you get up to the upper Bollinger Band or the lower Bollinger Band in sideways action, as a bear, I think they're going to get out of their positions here. As a bull, the first challenge up here. You went up today, hit the number, the 296 level, you got to 296.90, got over the Bollinger Band by about 80 points, immediately came down, and you closed actually under the 18-day average of closes. That was a gift for those that were bullish. That's how I look at it. Smart money, I think the pros basically took money off the table. In the platinum market, the question is, can you reach the Bollinger Band? That's how I'm viewing this. Because it's such a vertical move, it's very difficult to enter a market like that. Where are you going to put a stop? You tell me, you're going to put it and risk back to the 823.60 level from 861? Great, $2,000 risk. It's, I think, pretty high. So I look at the market. The market is just, it's not even overbought yet. It can still reach there. It doesn't have to, but that is a target for it of 879. Supports way back down at the 18-day average of closes under this formation. In looking at the palladium market, it's another gain, another all-time high today. Embedded reading, riding the upper Bollinger Band, still quite friendly. In the dollar index, let's take a look. If you take out the high of an outside day down, which yesterday was, the target, as I explained earlier, is either going to be the closest moving average above it or a potential Bollinger Band. That's what I teach. Does it have to go there? No. N-O, no. But the probabilities are that. They're higher than it not going there. So in looking at the market today, I'm watching this morning the rally going, what the heck is going on? You took out that high, go to the 18-day average, and you just ran into the brick wall. So I think the market is now trying to figure out what next. It's confusing because you have to decide for yourself. The Fed did say Europe's weakening, the UK's problematic, other countries have some problems. Does that mean people are going to run back to America, or is that the opportunity if they do certain things that we move back up? The other thing the Fed admitted, and this is problematic for the metals, is they're not reaching inflation targets. So you put it all together. But you know what I do? I talk about all this, and I talk about it all in my morning videos, which you don't get on YouTube. You can get them on my website only as a subscriber to my service. And I've been adding, as you know, ETFs more and more. I asked 2 days ago, I said, what more would you like me to do for this? Because it's really taken off. A lot of people like it. And I'm talking paid subscribers. And they said, put it out earlier. Done deal. I'm going to start coming into the office. I'm up anyways, so I'm going to come in a bit earlier. I intend on making the project where they're in your hand before 8:30 a.m. Central Daylight Time. That's a big change. So I'm going to start doing that, and I think you'll be able to use what I'm saying then as the markets are reopening in America, and you're able to get in. The stock market opens at that time. They reopen the stock well, the stock indices are open, but they reopen them. The grain markets will reopen. It's just market after market at 8:30. So how do you get this? Well, number one, it's not a giveaway. In this, it runs roughly 26 cents a day to see if you like it. I think you can afford that. If you like it, then you can decide. I want to buy a 1-year subscription to it, $156, or I'll go month to month for $15. Either way, nothing's going to break the bank there. But I'm able to do things that I don't do in these. I'm able to say buy here, sell there, cover the markets. Is it for everybody? It probably isn't. Is it for people that like ETFs? Yep. Is it for the futures trader? Yep, that's what I really gear on. So it's something you might find exciting. And when you're hanging there and you're saying to yourself, gee, I'd like to, there's a trade I'm thinking about, I don't know, what should I do? I'm in the same shoe you are. So you look and you're trying to find, what does another person think? That's what I'm doing. So if you'd like to get this, go to our website, www.iraepstein.com. Go under research or education down to morning subscriber video. It's simple. And folks, you can quit the subscription whenever you want. I think you'll find it's going to be part of your mainstay, especially for these prices. I'm Ira Epstein. Have a great day.